Vincenzo's Gold Crypto Investing this January the 7th, 2025. Daily cryptocurrency XRP blockchain technology video that you've come to expect, like, love, and need. From the #1 cryptocurrency and XRP insider and your trusted source for all the news you need without all the shysting, fleecing, and heisting that goes on around here. Use my Coinbase and Robinhood links below. Super chat to support channel or become members of Jabroni Killer. And that's all in the video description or the pinned comment below. And what we've been talking about has been some short-term bearish action in the Bitcoin and especially the XRP and the XLM, which continues to hold serve. And there was something interesting here about liquidations that I just seen here a few minutes ago. Right here, we're going to start with some quick news real quick. Crypto market sees 480 million liquidations amid spike in U.S. Treasuries. Over the past 24 hours, more than 157,000 traders faced liquidation worth a total value of $480 million. Approximately 400 million of that 480 million is leveraged. Crypto positions were wiped out. Consequently, Bitcoin price dropped 5%. Sudden crypto liquidations. The broader crypto market saw its market cap fall by 7%, with Ethereum declining 8%. The largest single liquidation occurred on Binance. The liquidation coincided with a sudden rise in 10-year treasuries yields. Data from the Institute for Supply Movement, you can see it's up to 4.681% on the 10-year treasury. So that's essentially almost 5% in free money, safe money, guaranteed money with no risk to lose other than inflation skyrocketing. So investors are selling some of their more speculative assets and putting it into the safer bet and safer money for the time being when they get concerned and they see interest rates that are appealing. The intensified concern about persistent inflation, higher yields often pressure growth-oriented risk assets, including cryptocurrencies, meaning they go down. Open interest levels also contributed to the wave of liquidation since yesterday. Both Bitcoin and Ethereum have lost $1 billion in open interest, signaling a significant deleveraging in the market. Some analysis are pointing towards crypto liquidations as an indicator that Bitcoin price will fall below 93,000. U.S. labor market data also potentially contributed to today. The JOLT, or the job opening report, revealed 8.098 million vacancies in November. This exceeded the 7.7 million forecasted. A strong labor market could promote the Federal Reserve to maintain higher interest rates longer than expected. This means more pressure on risk assets like crypto, because stocks and real estate and risk assets, they love lower and cheaper money. Meanwhile, today's market liquidation impacted crypto-related micro strategies, dropped 10%, reflecting the broader market downturn. Am I seeing that right? What is this? Minus 11.04% on the day, but then it says minus 41.87% today. That doesn't make any sense. The company has been aggressively purchasing Bitcoin throughout 2024, even making its first BTC purchase of 2025. Marathon Digital Holdings, the largest Bitcoin mining, also saw its stock fall by 5%. So that's something very interesting to watch, what the Federal Reserve and the criminal gangsters and fleecers there and what they're doing and how that affects the stock market and the cryptocurrency markets. Let's see MicroStrategies real quick, because MicroStrategies was on a tear. Let's see what we got going on there. Holy shit. So MicroStrategies was down 37.66% and 11% or 9% after hours. And let's see what's been going on with this. Because I still, even though this thing went to another all-time high, I do feel like there could be a bankruptcy in MicroStrategies if Bitcoin ever does have a big decline. MicroStrategies, I think it's 2026, they have a bunch of money that becomes where they got to pay it back. So it was down 46%, and it's down 34% from its high. And then if we look at the daily today, it was down $37 or 9% today, but it's down 32% from its high. And we'll continue to watch that to see what happens in micro strategies, because I find that fascinating. But if we look at the Bitcoin price, you can see the Bitcoin price, what we've been talking about in our last couple of videos with all these coins that were pumping, was this just a relief rally, and it was doomed to come back down and have its date with destiny down here at about 89,849, and then eventually make a run at the 100-day moving average in blue, because the next time it hits the 50-day in red, I think it's going to break that, and then maybe even come all the way down here to a slowly and steadily rising in the daily 200-day, which it hasn't hit since way back here in October. They haven't hit any of these moving averages since early October, and that's something that I'm still watching for in Bitcoin to see if we do come back down to that $77,739. We've been following that for quite some time. You can see Bitcoin dominance. Even as Bitcoin was dumping, notice the altcoins were selling off right here as Bitcoin dominance was rising, right? I don't know if you guys are catching on to this. That's why I keep emphasizing this over and over again, Jay. That's why I keep emphasizing this. Initially, when Bitcoin dominance falls, the altcoins will rise. And then as Bitcoin dominance rises, the altcoins fall. And now recently, Bitcoin dominance has been falling, and altcoins right here rose. Now Bitcoin dominance started the last couple of days to have an uptick or an upturn. And as we've seen, that one's easier to see. As we've seen now, right here, during this whole stretch right here, altcoins were falling, right? And then right after that, we had the altcoins rising as Bitcoin dominance fell for a couple of weeks. And now the last couple of days, Bitcoin dominance spiked up a little bit as some uncertainty gets into the market. Even if Bitcoin's falling, people sell out of their altcoins faster, and they put it back into Bitcoin, even if Bitcoin's falling, because they feel like that's the safe haven of crypto. And that's something that I've been trying to have you guys pay attention to, that it can kind of tell you what's going on. When the altcoins pump 200, 300, 500% really quick, if you go back and look at the altcoins, pick your favorite altcoin and go to November 18th, and then go all the way down here to about the first week of December, about December 2nd to December 9th, and see the phenomenal returns that you had during that 2 to 3 week stretch. And then go from the same time frame, December 5th, 6th, 7th, and 8th, and then go look at what happened through about December 16th. You had a big fall in altcoins. And then look what happened right after that, the week following December 16th into Christmas. You had altcoins rising. And now the last couple of days, as you can go back into the daily and see, since Bitcoin bottomed out here at 56.57% dominance, and then it rose from January 4th to January 8th now to 58.11% dominance. The altcoins have been falling at a much higher pace than the Bitcoin has, right? AMP's been in there too. It's been falling. And your next major support in AMP is going to be the 0.0067, but it could come all the way down here to the 0.00593. I'm still bullish long-term on that, but something that I've been short to medium-term bearish on ever since you hit the 63 cents back in here after you wick down. I've been short to medium-term bearish in XLM and XRP, even after they've had 20 or 30 or 40% returns from a wick low, like you've seen right here, pump, right here, pump, right here, pump. I've remained my bearish sentiment here, right? And you can see now that 43 cents, it was not able to hold it. If we go into the 4 hourly, it tried to hold it for several days after we had the nice pump from about where it stabled out and started to pump about December 31st through the wick pump on January 1st, and then it stagnated along the 43 cents major support resistance, and now it's looking like it's going to get declined. And then what you could be having here with the volume, because I keep telling you this volume is critical, is a Bart Simpson top where you pump up really quick, you have Bart Simpson's hair, and then you come right back down to where it started really quick, and it looks exactly like that. And that's something that I've been paying attention to, because if you go back into the daily, I've been showing you the volume. When you were pumping in your big bull market back here on January 6th through the wick top, November the 24th, and then when it finally gave up, notice December 9th, right when Bitcoin dominance started to rise. If you take a look at the volume at the bottom, right? Look at the volume. The volume was pumping all the way through with it. And ever since then, since we had our high in late November, early December, the volume has crashed. And then that line right here, that's the mean of the volume. And the mean of the volume's crashed too. And that often tells you that the buyers or the enthusiasm or the momentum, at least temporarily, has died down. And you're going to look for the price to come down. And that's just the trading rule. And if you look at what we had here with this most recent pump, you can see the volume spike wasn't that impressive. And it was significantly lower than the big sell-off back here, the other big sell-off here, and then the big sell-off back here. The volume has continued to trend down. And that tells me the sellers and the momentum are going away short to medium term. And you're going to have a price correction. And I think you could have a much bigger price correction than you've seen already. Does that mean it's going to happen? No. But I've been forecasting it and hinting at it and telling you, more than hinting at it, telling you that we're going to come test these moving average. Again, something that we haven't seen since early November. So over 2 months now, we finally did touch the 50-day moving average in the daily back here on about December 19th. Then we hit it again a bunch of times during the last week of December. But we haven't hit now the 100-day in blue. Yeah, I got a piece of hair on my phone. There it goes. We haven't hit the 100-day in blue or the 200-day in green in over 2 months, right? And I think we're coming down there. And the next major area, when you come to the 50 again at 37 cents, I think you might get a short-term, quick rally where some buyers might be stacked. But I think you're quickly going to come down to 30 cents and potentially all the way down here to where we had our first major pump and we had our big wick off here before we catapulted on that grayscale news filing that came out on that Friday night that pumped the price up 100% in about 8 hours, right? And I think there's a big chance that we come down between the 23 and 30 cents. And I do think we're going to hit all three of these moving averages before this correction's over. And then there could be a ferocious rally, and I'm warning you about that. I'm laying the groundwork that if we do come down to 23 cents or the moving average, it might be at 25 cents by the time it comes down there. You could have a ferocious rally all the way back up into this area of 120%, essentially, bam, overnight, right? All the way back to the mean right here, right where you sort of stagnated out just on a return rally of people that thought they missed out, people that thought they would never get that buying opportunity again, rallying and rushing and pouring to buy this coin. And I think it could all coincide with January 20th or shortly thereafter, after Trump gets in, that we could be having a big fall between now and the 20th. And then in the first few days of Trump, I think you might see that rally. But I'm calling and I'm putting a watch out, a pump advisory for when we do touch that 200-day in the daily, that is a trigger zone, a buy zone. I'm not a financial advisor. Read the video description below. These are only my personal opinions on the market. But that would be a big area where I could see a massive pump. The same thing with XRP for similar reasons. And we're going to continue to move these on the daily with the moving averages. You can see they're trending and slithering like a snake their way up. But the same thing that we've been short to medium term bearish on XRP after this $2.91 wick right in here. We started telling you that every day on the videos. Go back there in the early to mid-December. And I was talking about on every video the same as I'm talking about now. And again, we haven't hit those moving averages since about the second day of November. That this is something that could happen. And I'm putting a big pump advisory too after a big correction warning that we're in. And I feel like we're still going to come up. And you can see here we struggled to get above that 247, only a couple of wicks on the hourly candle chart. And then we quickly fell back. But this would be from the local top. Oops, it's actually a little bit higher at 290, whatever, 293-ish, all the way down to the 120. God, I don't want to buy you or I would have bought you. That's a 60% correction down to $1.21. And I could see, just like XLM, a ferocious rally, return rally, all the way back up to the mean, which would be about 110%. So I would be targeting down here for all these altcoins, especially specifically and most importantly, XRP and XLM, the 200-day long-term moving average in the daily time frame for when you do come down and retest that in and around that area. I think you would have a ferocious return rally. Not to say you would come back and breach the 291 or all-time high, but you would at least 1x some money, possibly slightly more, depending on where it starts from. And I feel like that's a very strong possibility, and that is something that I will be trading when the time gets there. But you can see we did stagnate. And with the volume, real quick, volume, the same thing as XLM, the same thing as all the other altcoins. We had the ferocious rally in volume, and then it crashed, right? And that tells me the enthusiasm and the momentum and the excitement of the retail trader has died down. And even with this most recent rally right here, look at the volume right there. That's the only volume you got. You got 2 days of increasing volume, which wasn't, in relative terms, comparison to what you just had, wasn't very strong. And now that's even died down considerably and turned to sell volume, because buy volume or momentum is green, sell volume or bearish action is red. And I feel like you're coming back down and going to retest in the 50-day moving average for the first time since November at $2.03. It's slowly uptrending, so if it takes 3 or 4 days, it might be $2.07 by then. And then I have a strong intuition or feeling that the $1.61 and the $1.21 will be hit and will be met within the next several weeks, as the bearishness short to medium term and the sell-off and the profit taking seems to be in full effect. And that's something that I'm going to continue to watch and pay attention for you, my lovely, beautiful audience, to keep you out ahead of the shysters and the fleecers and all the other criminal gangsters that have infiltrated the market, right? Like, subscribe, and share. Comment what coins you want to see me cover, and I will cover them. Peace and love.